Good afternoon, everybody. Let's go ahead and get started. I want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there just to let me know that it is indeed working. Hope everybody's having a fantastic afternoon so far. Obviously, our trades are off to a good start this week with the weekly trades. So, super excited about that. That's what we're going to discuss today. I want to show you guys today how to take trades from the scanner, Steve Scanner, and take the weekly trades and then close them Friday. Want to do a demo today. I want to show you guys how you can become a full-time trader just taking these weekly trades and how effective it is. Effective it is. I want to show you as well today. I actually have a order history from the beginning of the year. I have every single trade we've taken. I want to show you how that account has performed. We've made almost a 15% return in the first 3 months of the year. That's averaging about 5% a month since the beginning of the year with just Steve Scanner. And I have those trades. I have an order history from my broker to back it up. So I want to show that to you guys today. It's going to be pretty awesome. So that'll be really fun to kind of go through. We're going to get to that part at the end, but what I want to do first is show you guys how to take these weekly trades, how to find Steve Scanner, and then actually how to go in and take the trades, right? So I think that'll be awesome. Before we get started, as always, I need to remind everyone about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. Like I said, I also want to give a shout out and welcome everybody here. Got some people watching live. Good to see you guys. Thanks for coming. Hopefully, this is helpful to you. Also, want to say hello to those of you that are watching this on the website via the calendar. I know not everybody can come to the live call, and so I want to say hello to you guys that are watching this in the recording. Want to say hello to you guys. And then lastly, just also want to say hello to those of you watching this on YouTube. And for those of you who are watching this on YouTube, this will be a good opportunity for you to see how simple this is, and something that you can just implement in your own trading account. And maybe this would be something that you could implement in the future. And so I'll show you how to use the scanner, and I'll show you, for those of you that are on YouTube, how to set this up so that you can start utilizing Steve Scanner today. Okay, let's go ahead and jump into this. So first of all, this is Steve Scanner right here. So if you go to tradingwithsteve.com, you can click on Steve Scanner. We also have the scanner available under the member section right here, but since we use it all the time, we just put it right up at the top of our header here on the website because it's so often used. So the scanner, just in general, we're not, or this afternoon, we're not going to go over like every detail of how the scanner, like I'm not going to go over every single way the scanner works necessarily, like, because there's 6 or 7 different ways the scanner looks at different angles of data, and we don't have time to do that. We do that in the COT report call on Thursday nights. So if you're interested, if you're kind of like a nerdy person like me and you like to go into the data and look at like how stuff works, and you want to look under the hood and figure out new effective ways to trade, come to the Thursday night class. That's when we do that. And bring your thoughts and your questions there. Today, what I want to do in this basic training call is I want to help you guys who are kind of newer to the scanner know exactly how you're supposed to trade these trades. There's a couple of different ways you can use the scanner, but the most simple way is just to take the trades as a weekly swing trade and then hold them till Friday. It's the simplest strategy on the internet. I'm confident of it. All you have to do is just filter the scanner up here by overall strong buy and strong sell signals for the week, and then you hold those signals until Friday. All right, very simple approach. Okay, so in general, for the just a 1 minute overview of what the scanner is. So basically, Steve Scanner is something we developed back in, well, it's been actually a many year long project. The scanner was launched originally in October of 2023. So it's got about a little over a year and a half. We're coming up on 2 years of having the scanner. It's got undergone several updates. The most recent and most important update was the one we put in October. That's when we added the divergence column right here, and it also includes several other check and balance features that we added in the back end that have basically just made the scanner. I think it would like that final update we made the scanner elite, and so we actually haven't made an update to the scanner since then because it's called such fantastic signals ever since we made that update. But yeah, basically for those that don't know what it does is it goes out and looks at COT report data from the CFTC. COT report data is free actually. You can get it from the cftc.gov website. It's the Commitment of Traders report. It comes out once a week every Friday, and it tells us what the banks in the United States have been buying and selling as far as Forex and futures go. It also looks at CFDs and like gold and silver, precious metals, oil. It also looks at indexes like US 30 and NAS 100. And so it's really nice because the banks are really good at trading. And so when we get intel on what they're buying and selling each week, it helps us make better decisions as far as what we should buy and sell. And so we've really fine tuned this scanner to pick weekly signals. Okay, so the scanner is not a scalp trading scanner. So if you're somebody who's looking to buy something for the day or for the next couple of days, this is probably not your best tool, although it could be helpful. The best use of this scanner is, in fact, to trade as a swing trader. If you're a swing trader, I can confidently say that this is the best thing on the internet. I know I'm biased, but I'm going to confidently say that there's nothing better as far as picking the direction for the week or the next couple of weeks than Steve's scanner. And so, like I said, it goes out and looks at the COT data from 5 or 6 different angles. It also looks at what we call sentiment data, which is basically what retail traders are doing. And that's this information over here on the right side of the scanner. And then right here is the most important column. This is the overall signal, and you can even scoot this over so you can kind of see what this is.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
And so this will tell you what you're supposed to buy and sell each week. And so every weekend this updates. You can even see that up here at the top. It says COT data updates once a week on the weekends. When the market's closed, all other metrics update in real time as the market moves. So the scanner signals can change on a day-to-day basis based off of how the market moves. But by and large, Steve Scanner is going to have the same signal on Sunday or Monday as it's going to have on Friday. It's not going to change that much. And then the signals are subject to change over the weekend based off of the new data that we get. Okay, so that's all you need to really know as far as a preface goes on Steve Scanner is like what it's for, because some people might sign up for Steve Scanner. We actually have a 14-day free trial for people who don't currently have access to it. You can actually join and use it for free, 14 days. And then it's just 129 a month for those that don't have it, which is super great for those that just want to have access to the scanner. But the thing about it is some people come in with this idea that they're gonna just take trades on a day-to-day basis. Like they're gonna use it as a companion tool to their scalping. And it's really not, like I said, not meant to be scalped. It is 100% a swing scanner. And even some metrics on the scanner are designed for longer term traders too. So there's that, which is obviously not going to be very helpful if you're trying to scalp. Okay. So it's just a useless tool as far as that goes, in my mind, when you use it in context of a shorter term time frame. So the time frame that I'm typically trading Steve Scanner on is going to be mainly the hourly time frame, sometimes the 15-minute, the 4 hour, the daily charts. That's where you're going to be using the Steve Scanner. All right, so it's going to give you signals every week, right? So there's 28 major forex pairs. So you can kind of go through here. You can count them if you want. You can filter by pairs. So you got all the Aussie pairs up here at the top. There's the CAD pairs, the Euro pairs, the pound pairs, and you go down. You got the Kiwi pairs and the dollar pairs at the bottom, and then down here you've also got the two different major precious metals, gold and silver. You got oil, US 30. You've also got NAS 100, right? So we have all those different signals, and the scanner classifies signals based off of there's 5 different signal possibilities, right? You've got strong buy and strong sell. Okay. That's the highest grade or rating you can get on a signal. The next is buy or sell. Okay. That means that the scanner thinks that maybe if we're going to lean a specific direction, we're going to lean buy, or if we're going to lean a specific direction, we're going to lean sell. And then the fifth and final one is a neutral signal. And neutral just means that the scanner has no preference. Okay. That there's no real distinctive pattern or data that really indicates that the market can go a different direction. And it does so for like 7 different things. So you got the overall signals right here, which tell you the overall direction you should look. But you also got things like the 3 week shift, the 5 week shift in COT data, the divergence in COT data, the long term outlook on COT data, the crowded market indicator on COT data, and then lastly, the sentiment. And all of those can be classified as, like I said, neutral, buy, sell, strong buy, or strong sell. Okay, at the end of the day, the most important thing is this column, like I mentioned, because this one right here, this second column, is going to tell you what you should buy or sell. And there's 33 different instruments on the scanner, 28 Forex pairs, and 5 different CFDs to trade total. During a week, on a weekend, the scanner is going to update with new signals, like I said, when it gets new COT data. And you're going to get like something between 4 and 10 different signals. This week, I think we ended up with about 8 or something like that. Right here, we've got 1, 2, 3, 4, 5, 6, 7, right? 7 right there. And this can change and fluctuate a little bit. Like somebody came in here last night and told me that there was like 9 or 10 different signals. And sometimes the scanner is loading. Like there's a couple of pairs loading right now down here. That just means it's trying to retrieve or fetch some data on sentiment, or it could be we fetch data for sentiment and also divergence. And so if the scanner is trying to go get that data, it can take 5 or 10 minutes to update, actualize with the right data. So you might have to come in here and refresh a few times, but every weekend I'm going to post in Telegram the top signals from the scanner. And then your job is just to take the ones that I post. You could just go with the ones that are literally just on the scanner, or you can just go to Telegram because I take a picture of the top signals and then I post it into Telegram. You could take, it doesn't matter. You could take either one. So so right now I got 7 signals on here at the moment on the scanner, right? And you'll notice a couple of things. One of the biggest observations is you'll notice that they're highly correlated, right? You got Aussie pairs, you got strong sell on Aussie CAD, strong sell on Aussie Kiwi, strong sell on Aussie dollar. Those are correlated, right? What's the theme there? The theme is the Australian dollar. Right here, you've got a strong buy on the NZD franc, strong buy on NZD yen, strong buy CAD yen, buy franc yen. What's the correlation there? Two things, right? You got the yen as the quote currency in three of those pairs indicating a buy. That's a correlation. And then the other thing that's pretty common is you got the New Zealand dollar, which is the franc, or not the franc, it's the Kiwi, also indicating a buy. So the scanner is highly correlated. So what that means is if we're right and the scanner's correct, most of your trades are going to win. If the scanner's wrong, or during the period of a week, you could have the market could detour. Let's say you make 100 pips on a trade in a week, which is really common. If you hold a trade on Monday and you hold it and you open a trade on Monday and hold it till Friday, it's really common to make hundreds of pips on a trade. Like you could have a trade that on Monday and Tuesday gets up 200 pips in your favor, and then Wednesday pulls back 100 pips, and then Thursday and Friday it goes up another 200 or 300 pips in your favor. Really common stuff, right? And the reason for that is because one, you're holding a trade for that long, and the markets are very correlated with the scanner. And so there's a good chance that, again, if you're having a good week, everything's going to work out. If the scanner calls a week where maybe the trades aren't as good, it's really common to have a lot of these trades lose at the same time. So kind of have your expectations tuned to that, because if you think that this is like if you take more trades, because sometimes the scanner gives you 7 trades, like right now, sometimes it'll give you 10, sometimes it'll give you 4 opportunities. Just because you have more opportunities to trade doesn't necessarily mean that you're diversified. Okay. A lot of people think, oh, if I have a lot more investments, that means I'm diversified. Not necessarily, because they're correlated investments, right? If I like buy all in on the Aussie or buy all in on the yen, then I'm highly correlated. And we have to account for that. And I'll show you exactly how we account for that when we actually take the trades. And I'm going to do that right now. So let's just jump right in. So let me show you exactly how you'll take these trades. And by the way, before we get started, I also wanted to share, when you take Steve Scanner signals, I suggest that you have an account that you specify that's just for the use of taking Steve Scanner trades. In the beginning, I suggest that you get like a demo account and trade in a demo account for a couple of weeks just to make sure that you get the hang of taking these trades. After you've had some success and you feel comfortable with the winners and how it draws down when it draws down and how it wins when it wins, then maybe you can go into a live account or a prop firm account and use this. A lot of people have passed prop firm challenges in the past with these scanner signals. I've passed several different prop firm challenges just from taking these weekly trades. Um, the scanner actually used to be like before October of 2024, we used to use a spreadsheet. Maybe those of you watching this on YouTube, maybe you're familiar with the spreadsheet. So we had a spreadsheet that would like go over just like the buys for the weeks and the sells for the week, and people would just use that. We've highly upgraded, and we have something highly superior to that now, and that's the scanner. And that's what's cool about the scanner is it doesn't just look at 1 or 2 variables like the spreadsheet did from 3 or 4 years ago, 5 years ago. Now the scanner looks at all 6 or 7 variables that we look at, and it weighs all of them and says, hey, based off of what every single variable we have, we're going to take these trades, right? And so we're getting a lot more accurate signals on a week to week basis because we've built those checks and balances into the scanner, which we couldn't do with the spreadsheet. So I'm sure some of you who have been in the program for 3 or 4 years, or who have been occasionally watching on YouTube for the last 3 or 4 years, you know what I'm talking about. And so obviously we've made huge advances and upgrades since then. Okay, so you need to have a different account, because if you're trading multiple strategies in the same account, you're not going to really see the progress that you're making. You're also not going to be able to observe the risk management that's taking place in your account as well. So if you're combining strategies in the same account, what's going to end up happening is you could get over leveraged, over margined into multiple strategies, and that's not a good idea. Because you could run out of margin. But the most likely thing to happen is if both strategies or multiple strategies struggled at the same time, you would wind up drawing down too quickly. So that's the biggest risk to trading multiple strategies in the same account. And then I guess the final risk is, and this is actually a much bigger deal than I think we give it credit, is that if you start trading multiple strategies in the same account, your own accounting is going to be messed up. And it's really hard to see your progress over time because if you're trading multiple strategies in different accounts, you're able to see like, oh, okay, I'm doing okay over here, or I'm not doing okay over here. And it's you can make a decision a lot faster on how you're going to improve as a trader if you can separate your successes and your failures. But if it's all combined in the same place, then you really don't have a good, accurate vision on how you're trading. As soon as I did this a few years ago, my trading just got so much better because now I have accounts for different things. I have live accounts for different strategies. I have demo accounts for different things that I'm testing. Very important stuff to do. Okay. So let's go ahead and take these trades. I'm going to show you how to do this. So I'm going to pretend right now that I'm you guys take or myself taking these trades at the beginning of the week in my own account. Um, right now, I know it's Monday, and some of you may be watching this on YouTube, and it's a different day of the week. But let's just pretend that this is Sunday night or Monday morning. You can take these trades whenever you want. If you take them Sunday night, wait till later Sunday night. I would suggest that you take them maybe last thing before you go to bed. If you live in like Australia or the UK, then I would suggest that you just take them early Monday morning. As soon as you get up, make it one of the first things you do on Monday morning. If you dilly dally and let this thing sit and then you get to them later, you might miss out on a lot of gains. And Danny says, in your opinion, is it too late to take them? I was away from my computer last night. No, it's not too late to take them. You can still take them. There's still valid signals. The only challenge is like we're already up so far on the week. Like we've had a pretty good week so far, even though it's just been one day. And so that's missed out price action. And that not saying you can't do that. You absolutely, there's still valid signals. I'm still holding mine. I'm expecting mine to get better and better throughout the rest of the week. So yeah, go ahead and take them. I just suggest in the future for everyone else watching, uh, try to get them in either Sunday night or as early as you can Monday morning. So um, but they are valid all week long. So even if you took them Tuesday or Wednesday, they're still valid signals. Okay. And even last week, a lot of the trades did nothing Monday and Tuesday. Like the trades were kind of stagnant. We were even losing money Monday and Tuesday. And then after the tariff news came out last week, everything just took off in the right direction really, really well. And so, sometimes that happens too. It's just the context of the market. All right, so let's go ahead and take these trades. So what I would do on a Sunday night or on Monday morning is I'd come in here and I'd filter this by overall signal. And I want all of the strong buys and strong sell signals to float to the top here, right? In this column. Once I've got them, I'm going to count them up. I've got 1, 2, 3, 4, 5, 6, 7 at the moment. So I got 7 trades to work with. What I'm going to do is I need to calculate my lot size like the first thing. So once I know that that's what I'm going to do, I got to figure out how much risk I'm taking. So I would suggest here, I'm going to open up another tab on our website. We have a really unique tool, and this is free to anybody. So whether you're a member of our program or not, this is free. You can go to free tools on tradingwithsteve.com and you click on lot size calculator, and I suggest that you bookmark this page and that you use this page every single day for every single strategy that you trade with. As soon as you submit yourself to a position size calculator and just start treating trading like a business, the faster you will become a profitable and a successful trader, and you'll actually start achieving your goals. It may not happen overnight, but this is the one thing that will start tuning your compass the right direction in trading. So you got to go through this. A lot of traders just kind of throw position sizes out there and they're just like, you know what? I'm just going to take this contract and I'm just going to throw a trade there and see what happens. That's not going to get you to financial freedom, unfortunately. That's just a guess. That's just a throwaway trade type of thing. So we have to fine tune this stuff. It's the same thing. Like if I'm going to open up a business where I sell cheeseburgers, I'm going to want to know what my costs are to sell a cheeseburger. I can't just be like, let's just see what happens. Let's just open up a restaurant and see what happens. Not going to happen. Same thing here. 80% of restaurants fail New restaurants fell. And that it's about the same statistic with people who trade. If you don't have a game plan with trading, you're in the same category as just starting a restaurant and seeing what happens, right? We have to be a lot better than that. Okay, so what we do in here is this. We have to figure out how much risk we're going to take per trade. Before I even use this calculator, I'm just going to use a regular calculator to figure out my risk for the week. So typically, I risk, this is a really conservative setting, by the way, a total of 1.5% for the whole week. Okay, so you have to come up with something that you're willing to risk across all the trades. Are you willing to risk, 1% of your account for the whole week? Are you willing to risk 2%, 3%? This number just represents how much of your account could potentially be lost if these trades went the wrong direction, which, like with any strategy, that can happen and will happen. So we have to determine beforehand what we're okay with. And this is a very personal question. I can help walk you through it, but it really is up to the individual, and you kind of have to tailor this to where you're at. I've noticed for those that trade prop firm challenges, something between 1.5% on the low end to as high as 3% is typically a good amount of risk for the whole week. If you're trading with a personal account, you might be able to take this up to something like 5% or higher, and it might be something doable depending on your own risk tolerance. Okay. Again, there's going to be some losing weeks. And so if you happen to have a week where, a lot of these trades don't go the right direction, then you're going to lose closer to that 5% or that 3% number. Right. But we don't ever want to have a number that's like, 10%, 20%. If you lose 20% of your account in a week, that's not good trading, right? You can't have that kind of loss, right? I know traders that have done that. I've done that. I mean, I've been doing this for 13 years, so I've done silly things like that, but it's not a long-term solution to growth, right? So I think for a personal account, you can probably push a 5% risk per week. If you're trading props, max 3% and as low as 1.5. I've noticed those on the 1.5 typically grow their accounts pretty slowly. It's a very slow but steady pace. And so you might get a little frustrated with just 1.5, but at the same time, it's hey, nothing wrong with being conservative. I'd rather err on conservative than get too aggressive and make a big mistake on a prop account, right? Okay, so let's go with the example of 3% though. No, 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 no. Let's do 1.5. I'm going to keep it really conservative, all right? And I'll let you guys decide if you want to risk more than that. So let's just say I'm risking 1.5% per week. Now, keep in mind, this is not per trade. This is across all the trades I'm taking. So on an individual trade basis, we're actually looking at even less risk. Okay, so what that looks like is if I take 1.5% total risk of my account. So if I'm trading with 100 grand, 1.5% is going to be $1,500 of total risk on the week. All right. So if I go back over here to the scanner, Steve scanner, and I remember I have 7 signals that I got to take at the beginning of the week. I got 7 trades in my basket here. I'm going to take 1.5% divided by 7, and that's going to be 0.21%, which means I'm risking 0.21% risk per trade. So that's about a fifth of 1% of my account that I'm risking per trade. And if I were to multiply that by 7 trades, that's going to give me 1.5, which is the total amount of risk I'm risking for the week. So that means that if every single one of those trades were to lose and hit their stop losses, then they would lose 1.5%. I'd lose 1.5% on the week. And that, in order to lose that 1.5, you would have to lose on every single trade the full stop loss. Okay, so that's the worst case scenario. That's why a lot of people think that 1.5% is too little risk to take per trade. You may want to consider going to like 3%, because now if you take 3% divided by 7, now you're risking 0.42 or 0.43% per trade. And that's a little more substantive, and that has the potential to grow your account maybe a little bit more during the week. Um, but it also could lose too. If it went the wrong way, it's just more risk, right? So you kind of have to decide what you want to do. Okay, so let's go with the original example. So 1.5% risk on the week divided by seven total trade opportunities from Steve's scanner. That's 0.21. So now I'm going to go back to the lot size calculator. And what I'm going to do is I'm going to put in, I'm going to skip just a few things real quick. For my risk, I'm going to just put in 0.21. And so every trade I take is going to be 0.21% risk. All right. And that's not going to change for the whole week. That's just going to be 0.21% risk per trade. So now that that's covered, I can fill out the rest of this. Okay, so before we continue on, I got to fill out my risk for each trade. So let's start with the first signal, which is the Aussie CAD. That's a sell this week. So let's go back to the calculator. Let's go to the instrument. Let's type in AUD CAD. That's the Aussie CAD. And I'm going to put that in there. For my deposit currency, that's my local currency in the United States. That's the US dollar. If you lived in Canada, that would be Canadian dollars, right? And so you just put in your local currency. And then that's an easy thing to do. For your stop loss, this is the number of pips that you're risking per trade. Couple of things we need to cover here real quick. Considerations to have. When you're taking these weekly trades, this is way different than a scalp trade. A lot of people who scalp in the mornings will have, a 5, 10, 15, 20 pip stop loss type of thing. And that's normal for a scalp trade. Can you get away with a 20 pip stop loss and hold a trade for an entire week? Not typically. No, you need to have a much bigger playground for your trade to work within, because you're talking about the volatility of an entire week. There's news events, there's unexpected things that somebody could tweet, and then all of a sudden you've got a market frenzy, right? And so you have to have room, right? You have to have room for that kind of stuff, right? And it's just stuff that we have to deal with. But it's okay, because that's just the context of trading in an entire week, right? So how do we deal with that? So what we do is we come over here to the scanner and we use a double ADR. This is actually a recent change. We used to use just a single ADR, but my problem is that that's not giving the market enough room to navigate the whole week. And so what we're doing instead is a double ADR. So right here on the scanner, you can see the average daily range. That's what ADR is. For the Aussie CAD, that's about 60 pips. So what you would do is you would put in double that. So you could either just use a calculator, or I mean, for me, that's, if you're good at just calculating things, I can tell you that's just 120. But if you need the extra help of the assistance of a calculator, you just put in 60, multiply it by 2, and then that tells you it's 120. You can also just take 60 and add another 60, and that would be the same result. So depending on your math skills, if you're good at just, doubling something in your head, then just do that. If you're not, and that's totally okay, and you need the assistance of a calculator, just go ahead and multiply that number by 2, and that's going to be your stop loss in pips. All right. So now you come over here and you just put in 120, and that's going to be your stop loss for the entire week. Okay, so again, if you're a scalper, you might be like, 120, that's so many pips. Well, yeah, if you're scalping, yeah, but if you're holding a trade for an entire week, got to give it some more room, right? Because by the way, we don't even use a take profit. All right, these trades just sit, they sit all week long. So they have technically an infinite amount of possibility if the markets go in our favor big time, and sometimes they do. But we got to give it. We don't want to give it infinite amount of risk either. So that's why we use a stop loss, but we just have to be very loose with how much room we give it, because this is a big old trade. All right, so now we got 120 pips in. That's how you calculate the pips. Then you put in your account balance. That's easy. This is just a $100,000 account that I'm using right now to take this trade. If your account balance is less than that, you would put in less than that. If it's more, you'd put in more. This is just how an abbreviation of how pips are calculated. You don't need to do anything there. Right here, we already did this. Our risk per trade is 0.21%. This is just the current price of the USD CAD. This is important for the lot size calculator to figure things out. It already knows how to generate that, so you don't need to change anything there. You also don't need to do anything with the contract size, unless your broker is really, really weird. But a contract is usually 100,000 units, and so you just leave that there at 100,000. All right. Then you go ahead and click calculate. And then this is going to tell you what you're about to do. So if you were to take this trade from Steve's scanner right now, risking 0.21% risk on the week in a 100K account, that means you're risking $210 on this trade, which is a total of 0.24. If you round that, it's just 0.25 as a contract size. If you're using units, which I use units in Owanda, that's my broker, they use the unit abbreviation, then I'll use 24,840 units. So now I'm ready to take the trade. So I have an account here ready to go. Let's go ahead and jump into this Aussie CAD over here. You can see this is already moving in the right direction. It's down 1.16% today, which is great because obviously that's the signal direction is to sell, and we're doing great. So that's awesome. So let's go take the trade, as if this is yesterday and I'm about to take my weekly trade. So I'm gonna double check. This is the account. Yeah, that's the account I want to use. Okay, perfect. So I'm going to hit the sell button up here in the top left of TradingView. Now, if you're trading in DX Trade or Match Trader or MT4, it's going to be a little different. I prefer to trade in TradingView when I'm trading with my own broker, and my broker is Owanda. So I just go in here and click sell. And then this is a market trade. So all I have to do is just change the units. Okay. This is really simple, actually. Change the units, go back to the lot size calculator, and look at my units again that I just calculated. That's 24,840. Okay, 24,840. And then I don't use a take profit, so don't check that on. I just check stop loss, and I need to change this to 120. Now you'll notice when I put this in, before I take this trade, this is going to tell me what I'm about to do. It's saying I'm about to risk $209.94. Is that pretty darn close to what we put in on the lot size calculator? It is. Like, it's within a few pennies actually. So if your number is pretty darn close on here to the number that was calculated right here on the lot size calculator through the website, then you know you did a good job on this on your work, and you can go ahead and confidently and just take the trade. So let's go ahead and hit the sell button. Boom. Okay, so this trade is now ready to go. So what this looks like, it looks like this on a 15-minute chart. It looks like a sell right here with 24,840 units. You can see the trade just activated, just barely. I've got a stop loss up here that's at, it says if I lose, I'll lose $210.77. I think it's just accounting for a little spread there, or commission. And so that's exactly within a few pennies, or a handful of pennies there, of what I calculated. And I've got a distance right here of about 120 pips. I can measure that. If I measure from my stop loss down to where I got in, yep, that's about 120-ish pips. And so this trade is now ready for the entire week. I don't need to do anything else, like, other than just let the trade sit all week long. And so if the trade closes at its stop loss, you just let it hit its stop loss. There's nothing else for you to do. Some weeks, these are just going to run all week long and do really, really well. And then by Friday, you just close it. Typically in the around lunch hours at New York time, you'll just close this trade, and you're good. And you'll set up the next week. So let's take one more trade together to make sure we're on the same page. And then after that, I want to show you guys the statistics of this, and I want to show you how this works. If you just, like, I'm going to show you how the last 3 months have gone with actual results that I've downloaded from my broker, and then we'll go through those results together and answer any questions at the end. So let's do one last trade together. So if we go back to the scanner, I've now taken one of the 7 trades. I still have 6 more trades I got to take. I'm not going to take all 6 today. I just want to show you how you would do this. So now I got this next trade. This is the Aussie Kiwi. It's a strong sell. I got to take that one now. And now it's got a 44 pip ADR. If I double that number, that's 88. You can use a calculator. If you're good at math in your head, you can just know that that's 88 when you double that. Okay, so now we go back over here and I'm going to type in AUD NZD this time in the lot size calculator. AUD NZD. And we're going to get um, we're going to trade this pair instead. Then we're going to change the stop loss in pips to 88. Everything else stays the same. Risk, count balance, everything else is the same. Click calculate. And now this tells me what I need to do. It says you need a 43,072 unit trade or 0.43 contracts, which is the same thing as $210 of risk. So I'm going to use 43,072. So let's go back over here. Let's change our chart over to the Aussie Kiwi AUD NZD. I got that in my watch list. You can also just search for it up there in the top left. Then I'm going to go ahead and hit sell. And I'm going to change my units to 43,000, I think it was 72. And then I'm going to click on my stop loss. I'm going to change this to 88 pips. And voila, that is almost exactly $210. It's just off by 12 cents. If I wanted it to be even more exact, I'd have to put in let's see, I'd have to put in like the 0.432, and I don't think that's worth it. So I just always I forget the decimal there, and I do 43,072, and it gets it pretty darn close. So now I'm ready to take this trade. It's a sell from the scanner. We just went through the lot size calculator. We're ready to go ahead and take the trade. I'm going to hit sell. And then boom, I've got a market order to sell the Aussie Kiwi for the rest of the week. And so this trade will either win or lose. And you don't have to do anything else. The trade is good to just sit all week long. You'll just close it Friday if it's still open. It's possible it could be at break even, or maybe even a small loss or a big profit. Usually, if you have a trade open by Friday, that probably means you're making money. Um, but if the trade closes, Tuesday, if it closes Wednesday, that means you lost, and that's okay. You got to let those trades lose when they need to lose, right? Very important to let them just, if they go the wrong way, get rid of them, and we'll move on to the next week. So, okay, and that's it. So now you just got to take the other five trades, which shouldn't take you more than 5 or 10 minutes. You just got to go to each lot size calculator, plug in each one, and then do that. So now I'm going to show you guys how the results of this. So I downloaded this is a transaction report from Awanda of every single trade that I've taken in this account. This account balance started at the beginning of the year. Um, 82,469 was the original account balance at the beginning of the year. I'm trying to find the date for you guys so you guys can see the transaction date. Um, Come on, show us the date so everybody can see this. There you go. So, oh, these are the ones. Yep, this is it. Perfect. Yep. So you can see the trades that were taken. These were the trades that were taken on. They do day first and then month, the way it's calculated. So I know here in the United States we do it, month first, then day, then year. But this is just trades the 3rd of January, which was the very first trade we took this year. And it shows you daily financing costs. So this is actually a real depiction of how the trades are performing, because this is including the wins, the losses. It's including the daily financing costs with a real broker. It's including commission costs and anything else associated with taking the trade, which is a far more accurate representation of how a trade is actually how you're performing, because this is a real life scenario. All right. And so if you come over here, um, this is my P&L per trade. So this column, if you sum up this entire column, so you can see, this trade was a loser, this was a winner, loser, winner, winner, winner and those trades were closed just a few days later because that week was shorter. And then you can see as you continue on, loser here, big winner, 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 and so on. So if you calculate this entire row, or not row, this column, let's go ahead and do that. Um, to the very bottom here, which takes us to today. Oops, that went a little too far. Actually, let's do this. Let's do equals sum of the of R. Can I just do there we go. $14,273. This is on an account that started at a the account started right here with a balance of $82,469. Today, that balance is at, and by the way, I actually have a bunch of winning trades this week already. This balance is almost to over 100K if you include the trades that haven't closed that we just started this week. So, yeah, that's pretty cool. So, it's actually closer to 20K. Like we're almost up 20K if you include, because this has been a pretty good week so far. But yeah, $95,629. And so the net is $14,273 net profit off of an account that started at 82,000 something dollars. Really good return. So that's in 3 months. So you take all those trades from the beginning you take them all from the beginning of the year and you basically take the trades at the beginning of the week, close them Friday, beginning of the week, close them Friday, and do that every single week. Um, that would have been your result if you had started at the beginning of 2025, and and then today here we are on March, or excuse me, April 7th, 2025, just over 3 months, and you got like a 15% return. So yeah, it is fire. I think it's pretty awesome. It's fun stuff. So, um, yeah, not bad for a few minutes of work each week. And so this is also one of my favorite ways to trade with a prop firm challenge because I think that oh, I actually just realized these are all the financing costs. If you come down here, and then I think this is a little bit out of order. Either way, it's fine. But yeah, so it says not bad for a few minutes work of each week. Yeah, pretty amazing, I'd say. Pretty darn amazing. And then this is one of my favorite ways to pass a prop firm challenge because of how easy it is to just trade. It doesn't require a lot of analysis. You don't even have to look at the charts. It's just look at the scanner, take the trades, and hold them, and that's what you'll do. And then during the week, you're welcome to monitor your trades. Like you can go into your account and see how you're doing. But I wouldn't suggest that you worry about the day-to-day results. Sometimes it's when you're brand new, you get really excited and you might look at your trades every day and be like, oh, they're up. Oh, they're down now. Oh, they're up now. Oh, they're down. Don't get like that. I mean, I've done that. And so I'm not going to blame you if you do that. It's just try as fast as you can and as hard as you can to kind of get over that style of trading and just fall in love with the process of just doing something over and over and over again and expecting your results to pay off over time. Um, so that's going to be what helps you uh, be a better trader is if you just fall in love with the process of what you're doing. So okay, so that's the demo, guys. Really simple stuff. We went more time than I thought we were going to take, but I think this was a really good call. So yeah, any questions about how to take trades from the scanner or any questions on the weekly trades? Okay, awesome, guys. Well, let's have a great week. Thank you for coming. Have a fantastic rest of your day, and we will see you guys in the next call. Thanks for coming.